Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is sometimes the crypto market, sometimes the NFT market, but mostly the tariff market and increasingly the US Treasuries market. We will talk about whatever we need to get on top of whatever we need to for crypto. That is what we're going to be getting into today. China has been hit with 104% tariffs. It seems now the yuan is sliding, treasuries are rising. Bitcoin is holding 78K when I checked last, might be a touch lower just now. We'll get into everything that's going on in a bit more detail later in the show. We've also got on the headline side, Ripple announcing an acquisition of prime broker Hidden Road for $1.25 billion. Pretty big acquisition there. We've also got the latest on price action on crypto and NFTs as usual. As we get into the show, so stay tuned for that. I have Bread Guy, legendary, and product lead and co-founder of Pirate Nation and Proof of Play, Adam, with us today. Cannot wait to get into a bigger discussion in just a moment. But just a reminder, friends, nothing that we say here is financial advice. This market is very, very risky. And despite being called bond yield experts in the YouTube comments, we are not those necessarily. So bear with us, do your own research, and good luck, because it's challenging out there at the moment. With that out of the way, legendary, it's Wednesday, it's the 9th of April. How are you doing?
I'm doing awesome. I'm not going to foreshadow anything of the show. Instead, I'm going to focus on my little juice cleanse that I started.
Okay. So this is how you're coping. You just focusing on your juice.
I posted it yesterday. I'm doing this 4-day juice cleanse again. And
show us again. Which talk us through the color, the flavor. What do we got here? What are we looking at?
Basically, we got 6 juices a day. 2 of them are mainly water-based, like the one that I drink in the morning and one that I drink in the evening. And one is more, two are very heavy on vegetables and the other are more heavy on fruits. So that I do get like a total of 1.3K calories in per day, because I need the energy for the show and for my workouts. And I do this once a year. I mean, the last time I did this, Kelan was commenting on my post. ETH was at 3.5K. Now ETH is at 1.4K. And the question is, what will happen after this cleanse with the ETH price? Will I be the only one to be cleansed, or is the market in a cleansing as well?
Okay, we're gonna stretch the metaphor out then, I guess. Trying to think fast with it, but I haven't got anything yet. So Adam, how are you doing your side? What do you think about this cleansing? Is this like do you have any things that you do when the market changes or adjusts on a personal level to kind of recalibrate?
Maybe I could pick up some voodoo habits. I don't know if anything can make the markets heal right now. I think somebody just needs to take away Trump's Twitter accounts. that would be probably a really helpful cleansing.
Okay, so that's the kind of cleanse, the social media cleanse. That that's a different kind of cleanse. So we got the juice cleanse, we got the social media cleanse.
Staying off of social media is probably the best possible thing you can do. I think before the show, I was like, oh, I forgot to download X again, because I don't keep the app on my phone. I download if there's a spaces, and then like immediately after, just like delete it. I use it from my browser on the phone if I have to tweet something. And if you've ever tried to use X on the browser on the phone, it's like terrible. Like there's no support for it as a product, and so it's like painful to keep me away from using it unnecessarily.
Okay, so we're getting some alpha here, guys. Yes, we are going to get into the main headlines. We're going to get into the tariff stuff. If you're just joining, yes, we're going to get into the 104% tariffs against China. We're going to get into the Ripple acquisition. But first, Legendary's got the juice cleanse going to deal with what's going on. We've got the social media cleanse. Brad, you know what's coming. How are you cleansing to deal with?
I'm a little jelly of old Fern here, being able to do that. I got too much of my life tied to this phone. I'm not even on my phone right now, but to this app, I should say. So she's on there. She's still hitting me with notifications daily. I don't do the cleanse, and actually, I kind of find it fun. Like I'm watching, I'm able to disassociate myself so well from what's going on that it's kind of entertaining to just watch. I find CT to be hilarious whenever numbers are going down, just generally. Like that's when the memes are the best. That's when the vibes are I don't know. I don't even know. Like it just takes a turn. I don't know if any, you guys can sense that too, but like seeing people who legitimately know what this stuff is, who focus on macro, like Fejao, I think is how you say it, guy from Blockworks, who like he primarily focuses on macro trends. He has a podcast around and stuff like that. He understands stuff. I don't. So like I just whenever I see him crashing out with all this stuff going on, I just it's just hilarious to me to see people going through this stuff. I mean, I understand it's major, but it's just like, yeah, maybe that's what it is.
Yeah.
Yeah, but like it's so I don't know. It's entertaining for me. So like it's maybe it helps me cope. Maybe that's what this all is.
Have you seen the I can't find the meme now, but it's the alteration of the hard times create strong men. I can't find the meme now, but this person wrote it out. It's hard times create great memes, strong memes create good times create weak memes, and weak memes. Oh, okay, this was a joke. And weak memes lead to Libra coin. So I think I wonder where are we here then? Okay, so we've had Libra coin, so we're back in the hard times. So we're looking for some great memes to set off the cycle again, I think.
Yep.
Right.
And I
So
think that's
where
true.
we are.
Like you see the and with AI now, the production quality is just mwah, right? Like you like seeing all the videos of like Americans in factories making like making cell phones and shit,
That
and
was
everyone's just like,
strong
yeah,
meme, yeah.
just it's so hilarious. Yeah.
We're gonna be all tiny screwdrivers. Get your tiny screwdrivers, everyone.
Yeah.
I'm ready.
And then like seeing that adapted to like like I saw, what was it, the chopping block guys did it where they did that same meme, but they were able to put in like the founders of Curve and Hasib and all them were in like the same meme, but it was them. And like AI is so good that you can just fucking do that shit. It's so great. And that maybe that's to put a button on it. That's what I'm doing. I'm cleansing myself of my own actual work, and I'm diving into the AI stuff really heavily. I have a vibe coded app coming out here soon, so I'm trying to catch up to Fern. This one with a smart contract.
I'm going to come to you on that in a second because there's some, yes, we're going to get into the main headlines, but there's this cool conversation that came out from CEO of Shopify the other day where his internal memo was leaked, and it's just like aggressively pro AI and emphasizing the importance. So I'm going to come to you in that because I think that'd just be helpful for people to know about and for a short discussion on that too. But before we get there, let's get into the main price action headlines to get you up to speed with everything that is going on in the market. Today we have Bitcoin, all things considered, not doing too bad. It's down 3%, yes, but it is at 77K. ETH is down 7%, so doing slightly worse, I would say, at 1.4K. XRP is down 5% to 1.8. BNB is flat, actually, at 558. Solana is down 4% to $106. Getting into the meme coin side of things, we've got Doge down 4%. Trump is down 4%. God, ETH is down more than all of these things. Pretty outrageous, to be honest. Bonk is down 3%. Fartcoin is down 10%. Fartcoin is up 5% on the week, though, still. It's one of the only assets that's green on the 7-day chart. WIF is flat at the moment. SPX, Murad's coin, is down 10% too. Pengu, still a little bit red, at all-time low now, I think, as well. Mog is down 10, basically red across the board on the memes. Very little standing out there. We might draw attention to a couple of others in a moment. Getting into the headlines themselves, we have obviously China getting hit with 104% tariffs as the yuan slides and treasuries rise to 4.3%. We're going to be talking through the different elements of what's going on. A little bit to do with the tariffs, a little bit to do with China and its currency, and tying that in with the treasuries conversation as well. Legendary is going to be taking us through that in just a little bit. Super important conversation. Stay tuned for that. We've also got Ripple announcing the acquisition of prime broker Hidden Road for $1.25 billion. We've spoken a lot about how, look, all this stuff is going on, and it might be negative for the moment, but there is increasingly a lot of crypto M&A happening at pretty healthy valuations too. So something to keep an eye on. Some notable other price action. Hype's up 6% in the last 24 hours to $12.70 against the general market turmoil. Story Protocol was also up 7% to $4.20. So that's interesting to note, given that everything else is getting a bit hit at the moment.
Part of that, I saw someone from Asari was tweeting fees generated in the last 24 hours, and the original post is like, oh, hype's coming in around, I think it was like third or fourth behind a couple other large platforms, but still pretty dominant. And then people are like, yeah, this isn't accurate. And then 3 hours later, he's like, oh yeah, we reached out to Artemis, which was where they got the data from, and reconciled it, and they shot to number one. Like in the last 24 hours, it was like $3.5 million they'd earned in fees, because like perps going up usage wise, volume wise, while the market is going down and sideways.
I mean, it's interesting. Like the hype token is a really key outlier in terms of its token has a really good set of tokenomics set up, and it's set up in both ways, where if the markets are going well, people are trading more, therefore more fees. If markets are not doing well, there's another class of traders who like to, deal in the bloody streets, and they can also do well. And all that pressure goes back to the token itself. I mean, they have, I think, probably the best tokenomics in the market, and they have the added benefit of a product that generates real money. Like $3.5 million in fees in a day is significant. Like that's a real company's revenue, and not like, small protocol doing like 100K or 50K. So
yeah, I mean, PMF is such a rare thing these days, and whenever you can generate fees, it's usually a pretty good indication that there is a little bit of PMF there. So yeah, I think it just double clicks that, right? Like, and that was like my thesis from the other day. I talked about it on Monday, that I was looking at hype, and I was like, even with all the like downtrending stuff, like that's probably one of the tokens I'm looking to maybe start DCAing into over the next few weeks, months. I'm not going to try to time any bottoms, but it's one I'm interested in for the reasons you pointed out.
Excellent points. The other point as part of that conversation is that it is continuously eating into the centralized exchange market share. There was a tweet shared that
the perps volume is starting to get eaten into. Yeah,
definitely increasing their market share. So something to keep an eye on, as you say. Getting into the NFT side of things, Ledge, is there anything that we should know about? Saw a lot of CryptoPunk sales, a bunch of X-copy ones too.
Yeah, absolutely. As you said, CryptoPunks are still very healthy and still moving, given the fact that they look very attractive, very cheap from a US dollar perspective. In terms of the other NFTs, honestly, there's been a broader correction. Most of them are down. The only thing I really want to point out is the Kaito Genesis NFTs are up. We'll quickly touch on that as part of the Web3 Roundup. There's been a massive announcement coming out on them. And what I find interesting is that on the one hand, the NFTs are up 7% over the last 24 hours, sitting at a 1.9 ETH floor. However, that price action is not reflecting in the Kaito token in itself, which is down 9% over the last 24 hours.
Interesting. Good call outs. Just a couple of specific ones on the punks. A hoodie punk sold for 140 ETH. A bunch of other sales taking place in the 40 to 50 ETH region. The floor now is in the region of, I think it's 65K, which is getting towards the bottom. I think they usually bottom out around 50, or that's where they did do last time. So keeping an eye there. I think some people are seeing that as value for punks. However, interesting point. There's an official tax document. I think it's on the IRS site. One of the biggest holders of CryptoPunks, called Wilcox, was charged criminally. I think is a criminal charge on avoiding taxes, and he's got like, I think it's 8. I can't remember the numbers. I'm just going to make up the numbers, but basically the point still stands. It's like I don't actually want to make up the numbers. Basically, millions of dollars he has not accounted for with the taxes. I think it's something to do with the punk sales, although it's not specifically said so. But that is one of the main holders, and I remember because you can actually find him as Wilcox.eth, and he's got an amazing set of punks, and he started selling them. I can't remember exactly when. It would have been maybe the back end of last year, and started like selling quite a range of decent ones towards the floor because he's got such a humongous collection. So yeah, something to keep an eye on, and I think people are suggesting that could create a little bit of sell pressure as well on punk. So if you're looking for one, could be a reasonable time. Brad, you want to say something?
Did you guys see the tweet from Coinbase about taking out a loan against your BTC.
Yes, I saw that.
So ridiculous. Like it's just like, okay, for anyone who didn't see it, like Coinbase, the actual account, just at Coinbase, tweeted like, you might have some unexpected bills coming up. Now is a great time to
get into
lend
debt.
your BTC. Yeah, now is a great time to lend your BTC to take out a loan to then pay off like taxes or whatever else is coming, or maybe just like down bad positions in this market. But yeah, it was like a headline tweet, and everyone's just like, how tone deaf do you have to be to do that right now? But yeah, that was yesterday. Pretty fun.
I fire that intern immediately.
He came with a custom graphic because AI is so easy to do. The intern is all encompassing now, right? He can go, he doesn't need a marketing department. He can go prompt it, spin it up, and then throw it out on a tweet. It's great, high quality.
Indeed. I'm sure there are reasonable occasions where borrowing against Bitcoin might be a more reasonable thing to do, but take care of your taxes without that, ideally. A few other bits of news from around the space before we get into the main headlines today. I think you might find interesting. The Department of Justice narrowed its scope for crypto enforcement. The unit that was supposed to be dedicated to crypto-related investigations has become far more narrow than what it was before. The Argentine House of Representatives passed a resolution to establish a special committee to investigate the Libra meme coin scandal. Obviously, this was the one involving Milei and Kelsier Ventures, specifically the leader there, whose name was Hayden. I can't remember his surname. I definitely think we have not heard the end of that, so it'll be kind of interesting to see where that story goes. BlackRock announced Anchorage Digital as a custodian for its Bitcoin ETF to go alongside Coinbase. I've heard a couple of people would be curious to hear people's thoughts, saying, okay, well, this Coinbase definitely don't have a monopoly on this business anymore. I saw some people suggesting they were going to start selling off some coin because maybe you don't have a monopoly on that business necessarily. Other people might be invited in. MasterCard partnered with Kraken to allow European users to spend Bitcoin at 150 million merchants worldwide. That's interesting to note. Bitcoin launched on Abstract as an alternative to Bitcoin. It ran to 3.5 million. I'm not sure where it is now. I guess people having some fun and games on Abstract. And finally, as Legendary just alluded to, Kaito released its Info5 Vision article on how they seek to unlock monetization for the masses. I think Kaito has been in a lot of conversation recently because it is a great product. You can get awesome data. Teams can get awesome data on the mindshare that they're creating, generating on the timeline. But I guess the criticism has been it's kind of is getting gamed quite a lot. People are farming it quite a lot. Is the content organic and useful as it was? So those are the questions. Legendary, I know you wanted to maybe speak to that a little bit before I ask the boys what else is catching their attention.
Honestly, don't want to take it in the Kaito direction because there's something else that's been going on that I wanted to touch on, and it is World Liberty Finance. Just quickly on that, they started selling off their ETH position, or one of the wallets started to do so, and obviously doing that at a loss. Sharing this currently on screen and trying to find the exact data which I had at hand a second ago. There you go. They sold 5,471 ETH at $1,465 each, leaving World Liberty Finance with a total of a $125 million loss when it comes to their remainder of the ETH holdings.
Damn. What happened to that tweet from Eric Trump?
This somehow does not make me feel any better.
And isn't that specifically...
In fact, I would say maybe it's making me feel worse.
Oh, Adam's...
I'm here.
Yeah, you're back. You're back.
I would say I think it's making me feel worse because my one remaining thesis bullet point for Ethereum was that the Trump family was going to find a way to pump it because they own a lot of it. But now that they're out, I think game over for my bags. I think that was it. That was my final.
You've been slowly checking off the bull theses, just one by one, taking them out.
I mean, I literally did, like, we've talked about that here, right? It was like one of the bull cases with that not dumb people, but people just removed from the crypto Twitter Web3 conversation because like we've had to evolve into this position that we have now. Like, it's kind of a messy narrative. It's kind of whatever. Whereas like people, arms reach farther away, would see this and go like, biggest coin, buy it. right? ETH is a big brand, buy it. Right? They would just DCA, just like Eric Trump was doing, right? Just like, oh, good, it's a good time to buy ETH several times. They're doing with World Liberty Fire, but yeah, if they're getting hip to the what the streets are talking about, it's not great.
Indeed. I actually wanted to do two things here. Adam, wanted to check in with you at Proof of Play, at Pirate Nation. Like, obviously the market is going crazy across the board. It's very difficult to predict at the moment. How are you guys approaching it from a builder perspective? Like, what is your outlook? How are you dealing with things internally? What's the best way to navigate the situation? Because I'm sure a lot of builders are going through the same thing, and your thoughts might be interesting to them.
So I think most teams are going into like a cash preservation mode right now. So things that they would have spent on, they maybe are pulling back on. They're evaluating everything and saying like, do I really need this right now? Like they're looking at everything with an eagle eye to determine if it's going to add back value, whatever value means to that individual team. And different teams are optimizing for different things. Our plan is still exactly the same. It's build industry-leading infrastructure to support different kinds of apps, whether they're games or other, and build generationally defining games. Like, so we're still trying to build fun games, and we're still trying to build, trying to sell our amazing infrastructure services. Nothing changes. It's just a matter of how are we spending money as a company? How do we make sure we last? How do we like stick around? We don't want to be one of those companies that you like see like, running out of money because of frivolous spending. Not that we were ever frivolous spenders to begin with. We're very like mature capital allocators. However, we don't know how long this is going to last. And while we're in this mode, other teams are in this mode as well. So they may like where someone might have bought VIP in our game, maybe now they won't, right? And
Sure.
if someone was going to purchase, something in our ecosystem, maybe they won't now. We just launched PvP, which is a massive feature in the game that frankly should have launched 2 years ago when the community asked for it. If you go into the Discord right now, the vibes are immaculate, despite the fact that the pirate NFTs, which are denominated in ETH, unfortunately, are down bad. The pirate token price also, not in a great place right now. However, everyone's having so much fun. I don't even see people talking about the token anymore, which is like shocking, because before we launched PvP, that was a primary topic of conversation. It's like, here's what we're going to do to get these assets to go up. And now people are just playing the game. That's exactly what we want. That's exactly what our purpose is. It's to entertain people, distract them, make them want to play, and make them want to engage, independent of what the value of any of the things in the ecosystem are. So I think mission accomplished from the PvP side of things. And now it's a matter of how can we find more players who are interested in engaging with PvP.
Yeah, it's a really good point. I think interestingly, I think one of the things that happens in this kind of market is it flushes out anyone who might have been around for more speculative purposes. It's actually a really good time for those people naturally maybe get distracted somewhere else, and you get an opportunity. I think the way I look at it is you get this really nice opportunity to build a really cohesive, strong base amongst the people who are willing to stick around. And I think sometimes the most meaningful relationships are created and formed in these moments. We were just talking briefly about heading over to Dubai, which I think we're doing later this month. And a lot of people have been asking like, oh, are you still going to go? Like, if kind of basing their decision on going on the position in the market. And I was like, I think it's better. It's better if you're the people who are still going when the times are good, and when you're still going even when the times are bad, because those people that you can see around, I think something more meaningful happens there. So interesting. I think, yeah, it's a very interesting conversation to have, because I think a lot of people are figuring out ways to cope at the moment. Talking of ways to cope, before we get into the headlines, final points, I think this is super interesting as well. Brad, you made a personal decision that in order to cope with life moving forward, you must improve on the AI. But there's specifically an article shared by the CEO of Shopify, which was an internal memo. It got leaked and he decided to share it. Do you want to just take us through that and why you thought that was such an important article, and why you thought it was such an important skill to double down on?
Everyone must assimilate is the TLDR. Yeah, all right. So what he came out with was it was an internal memo that he said it was going to be leaked. Therefore, he's just going to release it so that other people can see it straight from the source and not have it misconstrued. And the TLDR is that he's been pretty bricked up on AI for a while now, several months. And he's basically making it mandatory throughout his entire company that you have to lean into AI to enhance your workflow, to understand what's going on, to basically uplift yourself, right? Or up level yourself, I think is the cheesy term I keep hearing. So you have to up level yourself through AI. And he said like it's coming down to where everyone will have evaluations, everyone will have questionnaires that are passed to them to make sure that they're actually doing this stuff. And anytime someone comes to them for a headcount increase, like say I want to blow out my team, you have to verify that everyone on your team is actually like utilizing the tools made available to them in order to maximize their own output through AI tooling. He said it's universal. It goes all the way from the C-suites down to the line level people. And it was just something I actually quoted the same thing. It's like you have to use this stuff. The tools are good enough on basically all fronts these days that you can increase your workflow in any way you want to, right? Whether it's your creative writing or your design or your data analytics or just general research stuff, basically anything. So I have also made a little bit of a promise to myself to start leaning into as many of these tools as I can. I'm trying to just isolate I'm trying to follow some other accounts that are talking about this stuff, trying to just like bookmark, check out tools, like make sure I spend time actually dedicated to utilizing these things in the day-to-day stuff that I do. Whether I want to or not, I'm trying to force myself to use this stuff because it's going to be an integral part to everyone over the like it already has been probably for some, but I think it's so painfully obvious right now that I need to start leaning into it heavier. So I am.
Interesting.
Kind of said it on the show when we were talking about that last Wednesday, that we were talking about a company where the company was encouraging people to use AI more and more and more, and I kind of said I would look at the people who don't. Yeah, I would look at the people who don't use AI, and these are the people who I would fire first, because they are basically massively hindering the productivity if they have like a resistance to use those new tools. And it seems like this is gonna become the reality for quite a few.
There's still a stigma associated to it, right? Like that's the there's a broad acceptance or feeling that it devalues you and or your work, right? If you're not the one creating it entirely, that it's like you're offloading it. And I even feel that way sometimes. Like we're working with people in the team. We have an intern. I say, hey, write this report for me. I want to see that like you're like you write this summary for. And I can see that it's like the actual writing itself is AI written, right? It's got the hyphens that everyone's been pointing out the last few weeks, all that shit. And in my mind, I go, okay, like I think it's fine that you source the information for writing this stuff, but I feel like if you just totally offload it to AI, it does lack a voice, right? It lacks a little, like, and maybe that's just like a demonstration of his prompting skill. But like, I do want it to have a little bit more nuanced character, whatever. And AIs today don't have the best way to replicate other people's voices. Until that happens, I still think it is better and it resonates more with your readers if you are actually the one writing the thing, even if a lot of the information sourcing comes from like AI sources.
Yeah, and there's nothing wrong with doing that way, right? Like for the complexity of our segments has been increasing so much that I'm like using multiple LLMs to do all the research, understand questions where I'm not certain about that, fact check that, and then write the segment together in a way how I would like explain the things or deliver the news. And like, I don't think there's anything to be embarrassed about that. It's just efficient to do it this way. And one of the things that I recently liked very, very much is Chorus, like CHORUS.sh, which is basically aggregating multiple LLMs, DeepSeek, Llama, Claude, ChatGPT, and you can talk to all of them at the same time, basically, and kind of have like a panel of experts. So you ask a question and you tell them like, drill holes into this, you do this, you question this, you fact check this, and you GPT 4.5 write this as humanly as possible. And you look at them going back and forth, which is super, super helpful if you have like one AI fact checking the other. And it's really helping to improve the like quality of results. And I have like the pro subscription level, and that's not sponsored. There's no ref link for that. I'm just pointing that out because it's quote unquote just $100 a month for all of them, which is just cheaper than having to subscribe to each individually. Because like just for ChatGPT alone, I pay $200 a month. It's a really good tool.
Interesting. That is very, very interesting to explore. It's kind of like having your own swarm of researchers to help you leverage.
We started using it for ads. So we're starting to experiment with customer acquisition on ads, and we're testing creative. So we have about, last I checked, at 100 ads going on right now in, like very, very small dollar spends just to test out conversion rates. And all the creative for it was all created with 4.0.
Interesting.
And the like end to end, we're like, we want 100 different ideas, go. We just copy and pasted them into the tool, and I'll have the results in a few hours from now because we're running them overnight.
Very interesting. So we'll have to get the results next week. That'll be interesting to learn. Always trying to figure out ways to leverage ourselves. Given that we're also entrepreneurial on the internet, we've just got to stay on top of it. So we'll always keep sharing our learnings with you guys as usual. But we've got to get into the main meat of today's show. Obviously, there's been escalation on the tariff front and further escalation this morning. Shout out to Oxy and Notorious PNG shouting it out in the comments. Legendary, I'm going to pass over to you straight away. What do we need to know? What are the updates, and how is it affecting our cryptocurrency coins?
Yeah, absolutely. Tensions between the US and China are escalating. President Donald Trump's tariffs are now in effect, including that 104% tariff on China. As a result, US markets have been selling off significantly yesterday into the midnight tariff deadline. And we also have breaking news, which the boys in the YouTube comments have pointed out already, that China was very quick to retaliate again, imposing an additional 84% in tariffs. That means that the total rate is now up to 118%. On the currency side, the yuan is approaching a 17-year low against the US dollar, and that weakness can also be felt across different Asian currencies, including the Indian rupee. And if we look at the European stocks, they have been impacted significantly. They are down 4% on the day. And also the S&P 500 is down another 1.23% on the pre-markets. And what's been also happening at the same time is something that's very interesting, and I've seen some timeline talk about that. It's both the 10-year and the 30-year yield are up massively. I think just yesterday we talked about that. UB specifically mentioned it did slide under 4%, 3.9 something. Now we're back up to 4%, and this is a very similar picture for the 30-year yield as well, which is up 56 base points of 0.56% in 3 trading days. And the last time we've seen that was in 82. So that's been quite a while ago since we've seen such a violent move in the 10, 30-year yields, which typically don't move that aggressively. They don't have that much volatility. And there's been an awesome article in the Financial Times kind of explaining what's been going on, because if you look on the X timeline, there's been like 2 explainers or 2 models. Some people are saying China is selling off US treasuries, which might be true to a certain extent, but certainly would not be. And that's according to not only Financial Times, but many other like experts on this topic who I'm relying on to pass this info. But this effect would not be strong enough to see the violent move in the 10 and 30-year yield. And what's actually going on is an unwinding of the base trade. So the base trade basically is using the discrepancy in the pricing between US Treasury bonds and the future contracts. That is something that we talked about, the base trade for Bitcoin. It's typically a quote-unquote risk-free trade, which institutional money likes to make. And what happened is basically you exploit this this small price difference. You buy the actual treasury bond, you can sell the futures contract, and you can aim to profit when those prices are converging. And what also happens is that it's wildly popular to massively leverage the trade. And I'm going to quote a bit from the Financial Times article, because that explain, in my opinion, is so interesting. Because we see significant leverage from hedge funds that goes up to 50, up to 100x even, and with very, very little margins. So the explainer says, let's say you put down $10 million for treasuries and sell an equal value of futures. You can use these treasuries, as I just had explained, as a collateral for up to $9.9 million of short-term loans. And you can do that obviously again and again and again. And a 10 million position, 10 million like capital spot position, can support as much as $1 billion in treasury purchases. And what Financial Times tried to do is to aggregate how big this basically leveraged treasury market is, which other analysts try to do as well. And it's hard to like pinpoint it down to a exact number, but the size is a bit more than $800 billion of leveraged long exposure. And what happens is, if you see this violent move, some of that leverage starts to unwind. There might be some forced liquidations going on. And another indicator that is pinpointing to that theory or to that explanation model is also the fact that we've seen that massive spike overnight, so US nighttime, which would be outside of market hours, which is typically when some of these forced liquidations would take place. I know a lot of info going on, but just to sum it up once more, the tariffs are live. China has very quickly retaliated and imposed additional tariffs, raising their level to 118%. The Chinese currency is struggling massively against the dollar and is also impacting other Asian currencies. And then we are also seeing the 10 and 30-year yields going up massively because of a potential unwind in the base trade in the balance sheets of hedge funds who have massive long leveraged exposure.
Excellent summary of what is going on. Thank you very much. A couple of follow-on questions which might help to kind of unpick some of the key details there. You started speaking about the 10-year rate, which is now going up to 4.4. Can you try and explain why is that bad? Like, what is it that the US is trying to achieve? One of the things was trying to get that rate down, right? They wanted to get the rate down. Why is it bad that that is going up? And then we're also thinking about, I'll leave the second part till after.
Well, the going theory, the 5D chess theory was Trump is putting pressure on the market to refinance US debt at a cheaper rate, because whatever he will do will cause the rate to go down, and that's clearly not happening. So that's the one part. And the other thing then is, if you have a sell-off in equities, you have a sell-off in stocks, and the question is, where is that money going to? And typically, you would say that the 10, the 30-year treasury yields are a safe haven asset. But because the market is getting flooded with them, whether that's someone saying that China is selling them off, or we see someone getting liquidated, that means that at the same time, because these bonds are inverse bonds, right? Means that at the same time that yield is going up as well, and that kind of makes institutional investors nervous, because the question becomes: is this really the safe haven asset that we want them to be, that we expect them to be? Because that's typically an asset class that you don't expect to move that violently. And the last time we've seen, not over 3 days, but we've seen a pretty violent move in those yields was 2020 during the COVID crash, and that caused a massive panic on the stock markets as well. That move was way stronger than the one that we're seeing today, by the way. But generally, it causes an additional layer of fear and uncertainty in the market, and it also kind of shows that, at least looking at the treasury yields now, that Trump's plan or alleged plan is not really working out as intended.
Okay. So I think that's pretty helpful for additional context. The other thing we started to focus on yesterday was the idea that, okay, we've got to start focusing on China. Yes, everyone was disheartened by all of the potential action against the rest of the world, including allies. And I think some of that criticism definitely stands. But it feels like now we're zooming way more into China. It's like, look, people are starting to think this other stuff is probably going to get sorted out. Maybe there's been irreparable damage done to some of the relationships, but it seems like the main event is China. That's where we're watching more. I understand the Chinese currency has been being defended quite a lot, and so, well, I think it's the stock market, right? We were just speaking about that yesterday, where they were buying. What's your take there, Legendary? There was also an article which I thought was very interesting. I'm going to try and find it while you speak to China a bit more, suggesting that there's actually more commentary coming out of the White House itself saying, okay, fine, the US has been the dollar reserve. The dollar has been the global reserve for a long period of time. But we're just not really sure about that anymore. Like we're going to move into a world where that's not going to be the case. And that'll have all kinds of implications for all assets moving forward. I'm just going to try and find that specific wording while you speak to China a little bit.
Yeah, absolutely. On China, I think we said yesterday they have quite a few tools in their box to defend the local currency, which is something they are definitely trying to do. They can use swaps, forward contracts. They can be more restrictive in how they handle their offshore from a Chinese perspective, yuan holdings. So they have quite a few things to do. And they've also been saying, right, they're willing to strike a deal, but they're also willing to fight this through. And they've been getting more creative with other things as well. Yesterday, we just spoke about the export ban for 7 rare earth metals, which are all metals being used in semiconductors. I think as a kind of a quick move, that was a news that I saw on my timeline yesterday. Apple chartered 5 cargo planes to fly Apple products, including a shit ton of iPhones, into the States before midnight to have that before the tariffs are in effect. So you definitely see this already impacting companies and countries massively. I think Apple also had said that they want to move some of their production from China to India, which is obviously something that China would not like at all, because they have this, not only do they control like 70% of the rare earth metals, they have like a very, very strong production there as well. So I do understand very much that China is willing to defend their stock market in very, very aggressive ways. And just going back to that theory that they're selling off yields, and there's been this analysis by Jim Bianco, who's also been saying that if they really were to sell yields, you would expect the dollar index to become weaker, not stronger, which is something that points to the fact that this is not what has been going on. And also what's going to be interesting, and that we'll probably have to report on in some sort later this week, is that the US Treasury has an auction of $39 billion of 10-year notes on Wednesday and another $22 billion of 30-year bonds on Thursday. The question is going to be, if the market's already flooded with them, who is going to be a buyer for that? Jim Bianco is saying should be interesting to see who wants these treasuries in the middle of this chaos. And it's probably just another point where it wouldn't make a lot of sense for China to sell off all of the US treasuries, or selling them off massively, because they are also a very good bargaining chip, right? And if you sold them once, you can't use them any longer. And as we've just said, like, it's super important for China to also resolve this problem, because they are fighting on many, many battlefields right now, right? They're losing production. They have this tariffs going on. They have a weakness in the currency. They obviously have significant holdings in US treasuries as well. So very strategically interesting to see how they are reacting and how they are moving.
Interesting. Okay. I think it's definitely helpful to kind of double click on China, because that's where the focus and attention is going. I found the article, it's not an article, it's a briefing and statement made by the White House 2 days ago. And there's a little bit in there from Steve Moran, who is serving as the chairman of the White House Council of Economic Advisors at the moment. And he said this, I'm going to share my screen, Legendary. There's just a small part in there where it speaks to I'm going to try and zoom in a bit so you guys can see a bit better. If you're watching in, you should be able to see this now. There's this little piece here where he speaks to the dollar. He says, he's speaking more generally about how the United States has been operating economically for a while. He said on the financial side, here we go, highlighting it here. On the financial side, the reserve function of the dollar has caused persistent currency distortions and contributed, along with other countries, unfair barriers to trade. to unsustainable trade deficits. These trade deficits have decimated our manufacturing sector and many working class families and their communities to facilitate non-American trading with each other. Let me clarify that by reserve currency, I mean all the international functions of the dollar, private savings and trade included. I've often used the example that when private agents in two separate foreign currencies trade with each other, it's typically denominated in dollars because of America's status as the reserve provider. That trade entails saving housed in dollar securities, often treasuries. As a result of all this, Americans have been paying for peace and prosperity, not just for themselves, but for non-Americans too. So this is, this is a big and very loaded set of paragraphs. I don't know if we're going to debate that.
In the blockchain world, we call that the monetary premium. That's the thing everyone wants, right? We want everything denominated in our asset because that gives it some nebulous thing that allows us to just like say this thing is worth more, but we can't really quantify why it's worth more and what it's about.
Maybe the next part of the paragraph, Brad, would be something that Ethereum could say to its L2s. It said, President Trump has made it clear that he will no longer stand for other nations free riding on our blood, sweat, and tears in national security or trade. No more free riding. I think many L2s might be, well, they're not guilty of anything. They're just playing by the rules that were set for them. And in many ways, I think a lot of these countries are thinking the same thing, right? Well, we're just doing what we've always been able to do. So anyway, the main point there being, this is the argument that is being formulated, which I think is interesting because, as Brett just said, for a long period of time, whether that's what you want in the blockchain universe or whether you've wanted that in the world, like that was something that was a not necessarily an honor, but it was something that you probably worked hard to be able to achieve and offered you a bunch of benefits. But now I guess the perception is those benefits do not outweigh some of the negatives in their view.
The analogies are kind of crazy. Like even in this conversation, right? You're like, oh, being the global reserve currency has gutted our industrial advantages. It has been offloaded to these other countries, and now these other countries are prospering on us and living on our backs. Right? That's Ethereum, right? It's Ethereum no longer is the hub for users. It has offloaded all of the actual like smart contract utilization to Base, to Arbitrum, to whatever, and it wants to claw that back. And to claw that back, it needs to, I don't know that it needs to displace itself as the global reserve currency. I think those are two separate issues, but there are a lot of analogies here that I think are kind of funny.
Can ETH start tariffing other chains?
Yeah, that was the joke. It's actually been made on the timeline a lot the last few weeks. The short answer is no, but yeah.
Not yet is the real answer.
Not yet.
Got to pay your tax. Okay, so I just wanted to put that out there as well, because I think this is happening at the same time, or at least that's part of the explanation for the thinking that is taking place. Leslie, you said, I think you had more to give. Did you want to close this out? Like, what are the implications for the market as you see it, maybe short, medium, and long? It's an incredibly loaded, complicated question. There'll probably be something that is incredibly important news that comes out in like 30 minutes time that might change it, but just like your general sense at the moment.
Yeah, absolutely. Just a couple of closing thoughts on that. On China specifically, just look at how fast China is reacting to that stuff while the EU is still thinking how to react and other countries are negotiating. China is prepared. They are ready for that. They are ready to probably also refocus on the Asian market. They have expected this probably to a certain extent because they're moving in a very, very decisive fashion, which is, abstract all the implications away for a quick moment. That alone is impressive to see. To your question, how the market is going to react, I have the pre-markets open on my other screen. When I did my segment on what's going on with the markets, I said the S&P 500 is down 1.3% on the pre-markets. It's now down 2.16%. That's a lot. I think short term, there's a lot of pain that we can still expect to see. Yesterday, we had one of the main headlines, which we did not manage to get to, which was that the BlackRock CEO, Larry Fink, is expecting a potential additional 20% drop in stocks. So I do think we're in for a lot of volatility short term. And if the market is recovering for a day, I don't think that's a reason to celebrate. Like I've seen a lot of people yesterday posting, oh, look, we are pumping, everything is green, what you on about? Like that is not very, very smart to look at it that way. I would also not trust the BTC recovery that we're seeing. So definitely in for a lot of short-term volatility and pain. And I honestly expect to see a lot of volatility over Trump's entire administration, because this is how he has been handling himself the first, not even 100 days. And I do expect this to continue. But I'm also definitely curious, and I'm aware we only have 5 minutes left in the show, to hear from Funky on this, who has been having his hand up for quite a while.
Hey, GM guys. No, I just was wondering, going back to the whole stabilization of the dollar in terms of the U.S., the global reserve currency, are we approaching the inflection point at which every Bitcoiner has been having this fever dream for so long about it's not controlled by any government? Does it become sort of the go-to standard for swapping in and out, for doing international trade, so on and so forth? So I just wanted to at least throw that thought out there.
Indeed. This is where it really needs to prove itself, right? Like this, the stage has been set for Bitcoin. I think like this is what you want, and it needs to perform ideally in this moment. So we will keep a close eye. And final thought from you, Adam. I know you came in a little bit with the comparison with Ethereum, but anything else here from you?
I'm just gonna wait to see how it all plays out. Last week we said, what is going to happen? Is it priced in? Not priced in? Not priced in. We have our answer, right? Like, are we going to pull back? Nope. Doubling down. And I see no reason to believe that we're going to soften our position at this point. Like, no goals from my perspective seem to have been accomplished. And what we've seen from like this administration, this like series of personalities, is that like admitting defeat and is not necessarily like one of their core values, and just being like, oops, like moving on. And I saw this Besson interview where he said, like a very small percentage of homes own 80% of the investment wealth in the country. Yeah. And so if you think about, and they think that it's not their mega base, or, so their belief, whether it's true or untrue, is that they're only hurting like the elite investor class, and they're not actually harming their voting base, and therefore they believe they can act with impunity. Again, this may or may not be true. I don't know if that like second order step of thinking is correct, but sure. If they feel that, if they're emboldened on that front, they're going to probably keep going, and probably more uncertainty means more pain. So I wouldn't give, I refuse to give a prediction last week. I'm giving a semi prediction now, which is gets worse. Then, because I don't see us like backing down. I mean, everyone's just trying to be the biggest bully right now.
I think one of the most reasonable parts of that is the idea that you can just wait as well. Like, let's wait and see until next week. I think people in this space, maybe because we've been just coming out of like this hypermania in a bull market. People are like really, really triggered to buy every dip or think that everything's going to come back straight away. And it's okay to wait and to appreciate that we're not in the same financial conditions as we were at the top of January. Like, we're not there. Buy the dip if you want to, but it's just, I don't think you need to in the same aggressive way that you did before, because it's going to be up 48 hours later and far past the point where you had bought. So I think that's a very sensible approach.
I did that in 2022. I was expecting the V-shaped recovery, DCA'd in, and ended up buying like 80% higher because it takes longer than you guys think, right? The market can continue to trend down for a little bit in these situations. Like the advice I saw from the founder, one of the founders of Bitwise, was just like, wait for a new acronym to come out, and like that'll be your trigger point, right? Whenever the government comes forward with some new program, which is like a liquidity injection, but they can't use one of the older ones, right? So they have to come up with a new one that's like a recovery fund or something. Whenever you start seeing a new acronym thrown around by the government, that's when like that'll be your first signal of like, okay, maybe it's time to start looking.
Yeah, interesting point. Look, we're drawing towards the end of the show. We're kind of already at time, but Brett, I want to give you a moment to speak to the other big news. Like, this is big news. I appreciate the tariff stuff is definitely taking over people's minds and, taking over everyone's psychology in a way. But the crypto stage is set in the States for all kinds of positive stuff. And we've been talking about how crypto M&A is going to increase. It's going to be super valuable. I think that's still important to talk about. So why don't you close us out, Brad, with this kind of quick summary of what's going on with Ripple, their latest acquisition?
Yeah, sure. So the headline is Ripple announces acquisition of prime broker Hidden Road for $1.25 billion. So if you don't know what Ripple is a cryptocurrency payments company. They're actually fourth right now in FDV at 183 billion. Hidden Road is just a prime brokerage. And if you don't know what a prime brokerage is, it's basically just a bunch of bundled services that large financial institutions like hedge funds use to operate efficiently. Right. So like you can think of stuff like custody, financing, clearing and settlement, stuff like that. Hidden Road specifically focused on the crypto-centric services for a lot of these things. And it's basically just that that Ripple is now positioning itself to better serve these large institutional players when it comes to cryptocurrency for those types of services. And we'll see that now they're going to start competing with stuff like Coinbase Prime. But short and sweet, Ripple is just positioning itself to serve financial institutions when it comes to crypto. It's hard to understand what Ripple does, frankly. Like, you just know that it has strong institutional ties, but it's not exactly tied to XRP, the price, but there is a lot of really mimetic qualities to XRP. So probably bullish price action, but in this market, like, honestly, like, you just got to look at it, write it down, and say, in the future, I'll think about this. But it's strengthening its narrative with its consumer base.
Good stuff. Important to keep abreast of what's going on the corporate side. I think we're going to keep doing that. I think it's important, but at the same time, we're going to keep focusing on the main stuff that's going on: the tariffs, the escalation, the re-escalation, and hopefully eventually some de-escalation. Hopefully we'll have some of that too. That is our show for today. Just a reminder, we do this every single day, Monday to Friday at 7 a.m. Eastern time for 1 hour, live on X Video, YouTube, Apple, and Spotify podcast too. Thanks to my co-hosts, Brad Guy, Legendary, and Adam from Proof of Play and Pirate Nation. Thanks so much for joining us. Have a wonderful day. Take care. We will see you tomorrow. Bye-bye.